Welcome back, guys. I just want to thank everybody who's been watching us on Wednesday night as a Wednesday period, just coming on live, just kind of share. Today, again, I'm gonna put my disclaimer out there. This is my personal watch list. This what my personal watch list includes does not reference or have anything to do with CFS Studios. It's just my way of when people ask me the question, I wonder if you really can evaluate a stock. It's a way of proving that by showing a series of time periods where I actually went, looked at a company, made the right decision regarding or the wrong decision. You got to take in consideration I can make a right or a wrong decision. And if I make a right decision, you'll see profitability in my overall portfolio. If I make the wrong decision, you're not going to see profits. So this is Wednesday, and I want to just kind of go back before I go. Again, if you've never been on our channel before, thank you. Don't forget to like, subscribe, tell a friend about Wednesdays when we go live. We normally go live between 12 and 1 o'clock. Today was a little bit late as I had a phone call that I had to make and made that phone call. Now that I'm done, I'm now coming to you guys live. If you have never before seen our channel to kind of see what I talk about on Wednesday, it's just me saying that, okay, I have money in my savings. Is there a way without me having to just work all my hours, $12 to $15, $20 an hour, and then waiting for that money? Or can I just actually use my savings in order to make income so that I can let my money work for me? That's what this whole thing is about on Wednesday. It's not a deferment. So if you're thinking of, oh, I'm looking at some stocks I want to add to my 401k plan, or you thinking about going through some type of financial plan and say, hey, buy these stocks. That's not the purpose of what I'm actually doing. I'm giving you a little insight into the way I think and the way I process information and the way that I actually earn income outside of any form of labor. So with that being said, I want to go back. We started this whole program on February the 1st, and I just want to kind of just go back and just look at that, kind of give you an update. You can always go back and look at the first episode that was on February 1st. Was a Wednesday. We talked about a couple of stocks, and these were the stocks that I talked about. That way you guys know, okay? I talked about Norwegian Cruise Line, Carnival Cruise Line, EPR Properties, and ABNB. These were the stocks that I looked at, evaluated, said, do I want to hold them on my watch list? And if I place them on my watch list, are these positions that I want to take advantage of? Would I actually buy these? Again, back on February 1st, if you don't go back and look into the feed, you'll notice that I actually, on the live feed, I had an episode on February 1st. And the stocks that I talked about adding to my watch list was Norwegian Cruise Line, Carnival, it was EPR Properties, and ABNB. I ended up deciding on two stocks that I had in my watch list that you know, that I placed. And the question would be, if I had the funds and savings, should I take the position? Let me tell you the results of that. At the time that I talked about Norwegian Cruise Line, the actual stock was trading at $15.35. I needed $1,535 in my savings. So this was back on that first, just so we clear. And what I talked about was Norwegian Cruise Line, $15.35. Now, this is important because as we are talking about this, let's look at where it's trading today. So if I actually took the position and followed my own advice, and this is what I stated, the current price was $15.35. I needed $1,535. I had it anticipated that over the next 24 to 28 months, it was going to go to $20. And a low, if I was wrong, would go to $11.30. I looked at having a 30% increase in the overall stock if it had a swing up. Well, Norwegian Cruise Line, as of today, is trading for $17.94. Was I right? Well, as of today, when I talk back on February 1st, if I took the position buying 100 shares at $15.35, I would have taken out of my savings account and my broker's account $1,535. Today, that's right. At this moment at 122, Norwegian Cruise Line is trading for $17.93. Now, you got to take in consideration that if I did this in the month of February, I could have added to my savings account. I'm going to tell you that percentage right now. So that way you know, because sometimes when you're going through stocks, you're evaluating, looking at the earnings, that would have gave me $250. I would have made $250. And because I used 15, I need to take 250 and see what my actual return would be. $250. And I'm going to divide that by the $1,535 that I actually used to make the money. So what I would have made, if I take 250 and I divide that by $1,535, I would have made 16%. Now, I'm not sure how much money you make in one day, but if you would have bought back on February 1st, like I did, or took the position and added to the watch list and did it, because this is the question. If I took my own advice, I would have made $250. And that is, today is the 15th. So 14 days later, if I would have took it from my evaluation, I stated that over the next 24 to 28 months, even though it didn't take that long to start rising, I still have a 28 to 20. But if I wanted to close this stock today, I can pocket, if I purchased it, $250. Let's look at another one. On the 1st of February, I stated that I evaluated the current price of Carnival Cruise was $10.87. That was $1,087, a little bit less money that I had to have in my savings, but $1,087 would have cost me to buy 100 shares. I had a high of $14.60 and a low of $7.34. Did my evaluation go out right? Did I make the right decision? Well, today, Carnival Cruises is trading for $12.10. So at the time, it was $10.87. And I'm going to minus that from the $12.10 it's trading today. And I would have made $123 on $1,000. Now, if I take the 123 and I'm going to divide that by what I had in my savings, $1,087, I would have made 11% return. I didn't have to wait a whole year. If the market does an average of, let's say, 10% in the 2023, I could have closed out that trade, walked away from the market the rest of the year, and I didn't mess with my ratios. I went ahead and I made money. So back on February 1st, I priced Carnival Cruise at $15.35 and Carnival at $10.87. I left those on my watch list and they continued on to the next time. Now that's the key. The other ones that I mentioned, that the only ones that I added to my watch list starting in 2023 was actually Norwegian Cruise Line and Carnival Cruise Line. I did not add EPR properties and Airbnb. However, I did have an evaluation when I looked at the companies and the revenue and what management was doing over the last year and to the current quarters. This is what I noticed. The current price at the time of EPR was $41.76. That meant I would have had to have $4,176 in my actual savings account. And I had a high going only to $43.70 and a low going to $39.76. That was my evaluation by looking at the company, discounting the earnings, looking at an upswing of only 9%. Now, Carnival and the region provided anywhere between 30 to 40% at hitting their highs if I was right. Well, at this particular point, for Carnival and the region, I was right by putting them on my watch list and keeping them up there. And then I had to make a decision, which only the people who actually part of the actual subscribers who was signed up for our membership program get to see that detail and see what I have made or not made. Okay, so that's important to understand. You got to go ahead and hit the subscription package. Go ahead and join, and you get the opportunity to see what I made thus far. But what you will notice is that when I did EPR properties, let's see what that is today. Well, today I had it the high of $43.70. As of today at 1:26 p.m., it is trading at $43 even. So I'm only 70 cents off, but the most I could have made though, and let me just tell you that if I took $4,176 and took that position out of my savings, and it's now trading at 43. So let's go ahead and take a little sit here. When I looked at it originally, it was $41.76. I now have it at $41 from $41.76. I would have bought back on February 1st. And as of today at 43, I would have made $124. Now, just take this note. One of the things I always talk about is the cost of capital. It would have been better. I only would have made $124. Now, we know that on Carnival Cruises, that only cost me $1,087. I could have made more money using less money. That is one of the reasons I did not add EPR to my overall watch list. I had it written down. Do I add it? Do I take away? But the cost of capital, I could use $1,000 to make $129, or I can use $1,500 to make $250. Again, that's $1,535 or $1,087. Either way, I've made more than 11% or 10% between the two cruise lines if I would have added them. And that was back on this. And then we had Airbnb. At the time, people were asking me, hey, would you buy Airbnb? After looking at the company, looking at what went on during the recession, look at what's going on in real estate, I actually discounted the price down to $111.04. That's important. Now, let's look where Airbnb is today. $138.15. Again, $138.16. This is at 127. You go ahead and you put an ABNB on your daggone stock symbol chart. I had it on the watch list. I did not want to put $11,104. I'm just being honest with you. That's what I had to have in my savings. So if I didn't have $11,104, I couldn't buy Airbnb. There was no way I could do it. However, if I had 11,000, which the cost of capital is expensive, let's look at what the difference in the stock price is. I didn't include it on my stock, but I did price that thing. So that gives anybody out there who was asking me, can Primo discount a company and actually come up with an evaluation? Well, if I did take his advice from just mirroring him, which I would suggest you don't. And this is the reason I say this. Anytime that I'm looking at a stock and I put it on my watch list and I want to decide whether or not did I do the proper due diligence to research the company, to discount the overall revenue streams, you got to understand this. I did my evaluations based on this philosophy in spite of you. I wasn't thinking about anybody who's watching right now. This is just you kind of seeing how my mind works and how I evaluate a stock. There were so far, there is 4 stocks that I looked at, and all of them are going according to plan. I only counted and put into place Norwegian Cruise Line and Carnival Cruise Line because I was looking at what I personally had in savings that I could deploy so that my money could actually make money for me. Period. Again, when I looked at Norwegian Cruise Line back on February 1st, it was $15.35. It is now trading at $17.89 as of 129. I would have been right. Made over $250 for deploying $1,500. So instead of me letting money just sit in my savings for the 1st of February all the way to today, I would have made $250 for using the money. Now, if you go to work, take your hourly rate, do that times how many hours you work, and ask, is $250 what you make in one day? And if the answer is yes or less, then you'll say, well, shoot, I would have got my own PTO because I would have got some paid time off from using cash. Keep that in mind. Always got to have alarms to make sure I remind myself of things. Sorry about that, guys. So I would tell you also, Carnival Cruises was at $10.87. As again, my evaluation would be $14.60 right now. Carnival Cruises, just so you know, if we're gonna go activity, as far as right now, it is trading at $12.10. Hasn't changed at 130. It's been $12.10 since I said it last. EPR, but ABNB. Let me just tell you, I had that at 111.04. It is trading right now. It has went up since the last time I spoke, and ABNB is now trading at $138.97. So we take that 138.97, we're going to minus that 138, and we're going to go down to 111.04. That is $27.93 difference. Okay, on 100 shares, that's $279. Now, in my personal opinion, I'm just going to be honest with you. There's no way I'm going to take $11,104 just to make $250 in 14 days. I'm just not. That's too much capital up front. Well, this was back on February the 1st, the first episode that I did as far as looking at how I function. Let's go to February the 8th. And on that day, I looked at Coupon Trade, which is CPNG. I looked at Babbel, which I'm sorry, not said Babbel, which actually Bumble. It's not even Babbel. I looked at Bumble, which is BMBL. I looked at Roblox, which is RBLX. And those were the only 3 stocks I evaluated. I got some new ones today I'm going to talk about, but let's just see. And then what did I add to my overall? Okay, now as of today, I would tell you, I did add Coupon to my watch list, CPNG. I added Bumble and I added Roblox. So as of today, these are on my watch list. Norwegian Cruise Line, Carnival Cruise Line, Coupon, which is CPNG, Bumble, BMBL, and Roblox, RBLX. These are all on my watch list. Now, this is what the price that I had. I had Coupon looking at $16.25 at a high over the next 24 to 28 months of $25. Let's see where it's trading at right now. At the time, it was $16.25 on February the 8th that I had mentioned adding this to my watch list. And where are we at when it comes to Coupon right now? From the $16.25, it is actually trading at $16.37. So since the time where I said $16.25 minus that $16.37, which is trading at actually $16.35 now adjusted, that is just a 10 cents when you really think about it. Just 10-cent move. Wasn't wrong though. It actually going, but I have Coupon over the next 12 months and I have it at a high 25. I did put it on my watch list. Let me see what I write about Bumble, the evaluation that I did. On Bumble, I actually had it at $39. Or actually, at the time, it was $26.50. So at $26.50, I had it at high. When I did my discounts, I looked at the earnings, looked at what they have been saying in their quarterly meetings. I looked at the industry, their competition. And when it comes to Bumble, we know that Match.com is their biggest competition. It's the grandfather of the dating apps online. What did I find out when I put this on my watch list? Well, $26.50. So far, every stock that I put on my watch list, I've been right about. Now we're gonna see when I'm wrong, but let's see. Bumble was trading at the time $26.50. And if I would have, if again, I would have had to have $2,650. I still stand firm that my decision for Carnival and Norwegian is my best choice right now on my watch list. Now, Bumble was 26. What is it trading at right now? And when I look at Bumble, just to make sure that, again, I'm going through this because I also like to be accountable. I also am looking to be corrected. Now, Bumble on my watch list at the time, I still had it at 38.72. At current time, Bumble is trading at $23.45. I always give two prices. So here's the first price. I stated that when I put it on February the 8th, when I put Bumble, BMBL, on my watch list, it was $26.50. I had it at a high of $38.72, and I had it at a low of $17.99. I talked about when I would enter this stock. Well, I would enter this stock, when I was going to enter it. So actually, it's still an opportunity for my watch list to enter. Just so we're very clear, it's not at the low of $17.99. If it dropped below $17.99, I would have to do a whole reevaluation, go back and look at what Bumble's going on and what's changed. Is it because of any recent communication? Is it because of the first quarter earnings coming out from the last of the fourth quarter? I would have to go and I have to look at those things. And if I did, I would have to make those adjustments. Those adjustments would tell me whether or not was I right. But as I stand right now, Bumble's still an opportunity because it is going down. And as it goes down, it means the opportunity to actually buy some getting better. What was the next one? Roblox. Roblox was trading at $38.31. What is Roblox trading at today? $44.95. I would have had to have $3,831 in my actual savings account. In my savings account, that's what I need to have access to. And if I did today, let's just look at it. I had it at $38.31, and it is now trading at currently Roblox $44.96. I had Roblox going to $55.33 over the next 24 months. So just to be very clear, I literally would have, if you take in consideration, it's a $6, and so that is a $6 swing. Now that's $6.65 times 100. That's a $665 gain. If on February 1st, if I made that decision to buy Roblox and today was trading at, I would have made $665. Keep that in mind. I would have literally had to buy 100 shares and it would cost me $3,831. If I took the same scenario and I was to take Norwegian Cruise Line and I would have bought 300 shares of that or 200 shares, I could have made the same amount of money around the cost of 100 shares of Roblox. Or I can have one share of Roblox. Okay. Now, the last one that I would like to just say is that my current watch list is still Norwegian Cruise Line, Carnival Cruises, and Norwegian is NCLH, CCL, CPNG, BMBL, which is Bumble, and Roblox. Now, I share that with you guys so I can just bring you up to speed because today I'm going to talk about Wells Fargo, Nike, Delta Airlines, which is known as Love, and then DraftKings. People ask the question, so I went through and I did my due diligence. When I did my due diligence, I looked at them. So let's start another one to see if I'm going to be right or wrong. So what position do I take? I go and I take Wells Fargo. Now, Wells Fargo, currently right now, I'm going to give you absolutely. I've already did my research, but I just want to use a live number because my research has a little bit different when I did it. So it's $47.92. Okay, that's where it's trading at right now. $47.92. Love, which is Delta Airline, LUV. Do I add this to my watch list or not? This is another airline. It is $35.75 currently. I got DraftKings for all you gamblers out there, because as you know, with the NFL and with the NBA playoffs coming up, you're going to have this in March Madness. Next month, there's going to be a lot of people out here just gambling just to be gambling versus doing what we're doing now, evaluating the stock. This is, again, my personal opinion. Guys, you got to understand, you got to do your own due diligence. I'm just being accountable. Whenever you put something out on YouTube and you make a declarement, a statement of what you think a stock should be 24 months to 24 months, you get to be called on that. You got to be accountable if you're going to put that information out there to say he was either right or he was wrong. So far, everything I put on my watch list, it's actually good right now. The question is, did I take my savings and deploy the resources in that direction? Because I wasn't wrong. And if you, again, I'm not telling you guys to do this, but if you would have took the position and took those same stocks, you would have made some money. Now, I don't suggest you do that because everyone needs to be accountable for their own research, because I don't want nobody blaming me like, hey, I picked that stock because he picked it. Again, everything that you're seeing is on my own personal opinion. It's not a reflection of CFS Studios. I'm one of the on-air personalities here. And this is something that they gave me the opportunity to do on Wednesday because of individuals saying, well, can he really do what he say he can do? Can he make money? Well, I just proved it. Now, with that being said, we're going to look at Nikes. That's my little slap for anybody who's watching this who know they sent me that message. And for those ones that's doubters out there, some of their names start with M and C, and some of them also start with C and M. Now, so that way, I call you out like you called me out. So let's make sure that you can do what I do. Now, if that doesn't stop going off, now that is a reminder, guys, because every Wednesday, if I don't do the show, it reminds me to get up and go do this. That's my commitment to you guys. So you're hearing my alarm go off. Said, if I didn't do the show, I would have hit that off. But since I'm doing it live, I can't hit it off until it comes out. So here it is in a nutshell. Nike stock right now is trading for, I have it on my watch list, a little bit higher than when I did my evaluation early on Monday for this stock. Let me look it up. Nike is actually NKE. So if you're looking up like I'm looking up, it is actually $127.30. Now, let's go through my evaluation. Do I add Wells Fargo, which is a bank? Do I add Nike Consumer Goods? Do I add Love, which is airlines? Or do I add DraftKings to my overall portfolio? Now, you guys may be trying to figure it out, but let me just go through the process of telling you what I think it would be as of today after my research. So let me just go very quickly. And again, if you have a question, concern, don't forget to like, subscribe. I'm just going to tell you this right now. Don't forget to like and subscribe. That's right. Likes count, guys. So if you're enjoying this video, I know that it may seem like I'm really hammering this down. That's because I want you to understand that when you have money in your savings account, that the average person looks at the money in their savings as a method. So if I can't pay my bills, then I can pull from my savings. That is not how Primo Galicia look at his savings. I look at my savings as money that's about to go to work for me. So I don't have to go to work. So if a rainy day happens, I'm not using the actual principal. I'm using the gains that I make on my money. And that is the money that I'm going to use in order for me to pay my bills if I can't go to work on a day. Because my money's going to work for me just like I go to work. If I go to work and I work 8 hours, my money's going to work as well. And it's going to stay working. Now, with that being said, let me just look at this here. We're going to start off with Wells Fargo. Okay. So you said, okay, DraftKings opened at 1675. It is now 1776. Thank you for that vertical connections. That is a true statement. Now, that was the reason that I gave you a current number, because if I would have gave you that number, which I actually had it, I did my research on Monday. So if you go back to Monday, tell me where it opened up at Monday. Go back and look at DraftKings on Monday, because we already seen that it actually almost made a dollar move. Now, you got to remember, if you got 100 shares, and it goes up 80 cents, that's $80. So again, that's using your money wisely. So I'm going to start off first with Wells Fargo. Give me a second here. Appreciate that comment. Now, when I go to Wells Fargo, should I add it to my watch list or should I not? Let's look at it here, because I got to look at what my entry is. And I think the most important thing, guys, is how I enter the stock. It all starts on how I enter the transaction. If I actually pay the actual $47.92, even now, since we started this video, is actually trading up. It's actually a little bit trading up. It's at $48 right now. So I missed already 6 cents move if I was going to actually buy this. So I'm falling behind. So let me speed up, because I'm doing this in real time. Because somebody asked the question, well, can you do it in real time? Well, I'm showing you I can do it in real time. And at $48, if I was to try to go into this stock, I'm looking at entering this stock actually, because I got to take in consideration of what they call capitulation risk. Now, you may say to me, what is capitulation risk? Capitulation risk has to do with everything outside the company. Has to do with maybe what the feds may say, what consumers may view at this time, Wells Fargo, any information that be negative with Wells Fargo that someone else talks about. You always have analysts, or we like to call different people who look at the actual stock. And when they look at the stock, they may say, hey, well, I expect, Wells Fargo to either be overpriced, underpriced, or sell. They say buy, sell this. I'm not an analyst when it comes to that scenario for anybody else. I'm just an analyst for my own finances right now. So I'm not thinking about that factor, what anybody else has to say. But what I will tell you is this. if you're going to go after this stock here and you do your due diligence, your price is going to be different than mine. But let me tell you what my price is. If I'm going to add Wells Fargo to my actual overall portfolio right now, I'm looking at entering this stock literally at this price, which we had. I got to switch it now to $48 because that's what it's trading at. And I take my same numbers I had before. I'm looking at getting in this stock around $41. That's my goal. My entry is at $41. So if I'm going to buy Wells Fargo, I got to be able to enter at $41. Now, where do I have Wells Fargo's going 24 months from today? 24 to 28 months. What is my anticipation that this stock may be trading at? Here's the answer to that question. Again, this is using the $48 entry price. What the market is saying, but I need to enter at 41. I can't enter more than that, period. That means I need to have $44,100 in my savings account, even to make this trade. That's buying 100 shares. Again, I buy everything in 100. You need to know that when I'm doing my evaluations, it's always based on 100 shares. So here's $48. I need $4,800 in my savings to be able to do this trade. I'm entering at 41. Where do I see this trade at in 24 months? I literally see this trade in 24 months being $56.50. That's right, $56.50. So on the low side, I see this being 24 months from now, which still is a good idea if it's on my watch list. If I put Wells Fargo on my watch list, I see the high, and this is me thinking about myself. If I'm going to exit this, I'm exiting at $56.50, okay? But my entry got to be at 41. That's my entry. So right now it's trading for 48. So that's what it's trading at, $48 at the time when I did this evaluation. And this, now again, Wells Fargo's closest competition, just to be clear, is going to be Citigroup, it's going to be Bank of America, it's going to be US Bank. These are going to be the most dominant ones. And then Chase. Chase is actually the lion's share. It's the largest bank anyway, but Chase is the lion's share of actually doing this. Now, I would tell you that for now, I am not going to add Wells Fargo because it costs too much. I'm just going to be honest with you. I wanted to go over this. You want to know? I'm going to tell you early in the video. It will not be added with Norwegian Cruise Line, Carnival Cruise Line, Copan, Bumble, and it won't be added with Roblox. And it's just right now because if I'm looking at a bank stock, which we know is when it comes to bank stocks, they pretty much, they grow slowly. But if Wells Fargo has another scandal, okay, this stock may drop down to $37. So I got the low being around $37. Now, it was around $37 before and almost got down a little bit underneath that, not according to COVID or anything, but just for the simple fact that during the time that Wells Fargo was going to that part where it's opening accounts illegally and they were putting them in people's names because they just need to have more users and they were telling stuff to the market. If they have anything like that or any other problem, I see the stock trading under $7.50. Keep that in mind. What's my next one? Nike. Now, I know that every time you go on Instagram or you look at somebody on Facebook, the young millennials today like to show you stacks of shoes of all of these Nikes, but they don't own the stock. I find that to be so interesting. Now, I would tell you that Wells Fargo and Nike, if you're buying these stocks, you got to keep in mind that they, at this particular time, let me make sure I don't put my foot in my mouth for my due diligence I did before. Let me just look at one quick thing that I do know just to make sure I don't make the mistake. Wells Fargo does pay a dividend, guys. So it is a dividend paying stock. It pays about $1.20 annually. So just keep that in mind. So if it's paying $1.20 annually, then you're going to have a situation where even though it may pay you that it also take whatever the dividend. If the dividend is $25 and you actually put, for example, it's literally $4,700, actually it's $4,800. So if it pays $25 in a dividend, you might as well say that you're now under that. You at $4,975. So that's what it'll be. $4,975. You're under 48 because they gave you $25. So you expect the stock to come down. I just want you to understand that, not go up. Whenever they declare a dividend, just take that portion according to your large portion. So if it's 44,700 or 4,800 period, that's what it is. It's now trading under $48 a share. That's why you hear me kind of adjusting these numbers. But if you just think in mind, $4,800, take $25 off of that if it pays a $25 dividend. So now you're looking at $4,790, $4,775. I don't know why I couldn't say that. It was definitely a math mind blow. Okay. Now let's go to Nike here. Nike's at 127. Okay. Nike being at 127, currently, at the time when with 127.30, it's not that much difference, 3 cents right now, 127.30. Let's go through the evaluation. With everything that I do know, Nike is actually on a run, just to be very clear. On a run, it's up $1.10 because we go into that type of earnings and earning calls. But let's just look at it from a standpoint and see 24 months to 28 months from now, what do I anticipate Nike being? For all those out there who, love the Nike brand and say, I want to own, a Nike shoe. Well, we need to go out here and look at that price point. First of all, if I'm going to enter Nike, I cannot enter Nike at the 127 price. I have to put in place some protection. Now, keep this in mind. For Nike, I need to have $12,730. So that's $12,730 I got to have in my savings account. So it's a very expensive stock for somebody who's new when it comes to trading. So I'm going to tell you this now before we go any further. There's no way. I'm going to give you some information, but there's no way this is being added to my watch list. And I am doing this early because a person last time has stated, could you tell us, would you not or would you? I'm just telling you now. This is not being added. It's too expensive. But for the ones who ask me about Nike, would it ever go on my watch list? My answer is no. And it's because of the cost. You have to be able to look at the savings you have, and you have to maximize the savings. And you could buy 2, 3, and 4, and 5, and 600 shares of one of the other ones that's less expensive and still have money still in your savings, just to keep that in mind. But where do I anticipate Nike going in 24 months from now? Well, here's my answer. At 100, and so again, if I'm going to enter Nike, I'm going to tell you this at this $127.30, I need to look at Nike and I need to discount Nike based on what my discount is. And I have my discount discounted literally $15 or more based on what could take place in the consumer spending over the next 24 months. So let me just discount $15 off of this. That means I'm looking at an entry around 112.30 for me to buy Nike. I need, again, my entry, if it's going to be me, I need to be able to buy Nike at 112. Now, you guys may say, man, but shoot, this thing is trading at 127. That right. I need some capitulation. That means I need some bad news. I need bad news where the general public panic, because I know the good news. I see what the earnings say. But I need the general public and I need everyone else to not be favorable for Nike in order to get Nike. So that's why you put on your watch list. Things that go on your watch list are not necessarily things that you buy. You don't need to put on your watch list if you buy it, because once you buy it, you got your real-time position list. But if for me, I look at it as, okay, if I'm going to go into this is what I need to have it at. So this is the entry price. I need to discount it by $15. So Nike being discounted by $15. I need to be able to get it at, so I'm looking at the 127, my entry is going to be right there at 112.30. Where do I see Nike going as a high 24 months from now? So we're looking at 24 months from where we are today. And I'm looking at Nike based on me discounting and then seeing where the earnings going to go. I see Nike going around a high of $153.90. That's where I see it going to. So when you take the 148 or the 127, $127.24, and I minus that from the 153, if you bought 100 shares, if I buy 100 shares, that's 26. So if I take 66 times 100, I will literally make on this trade $2,666 if I added it. But I'm not adding it to my overall portfolio because I said it before. Once you go beyond your savings, you don't even put on your watch list. So one of the things that I've always done is I look at what I have in savings in order to put stuff on my watch list. I'm not really into wishful thinking. I'm not into buying less than 100 shares. So at this particular price, we see Nike at 127. I anticipate next 24 months, Nike hitting around 153.90, as long as there's no bad news. So I gave you the number for Wells Fargo, which is WFC. I got that at 47.92. It was trading up at 48 by the time I talked about it. I got a low. My entry got to be at 41. I got to see it as a high of being $56.50 and a low of $37.50. I got Nike at 127.30 when I first started talking about it. Regardless where it's trading at now, it could be higher or lower. One of the things I would tell you is that the entry price for me has to be 112.30. But I see Nike in the next 24 to 48 months going to 153.90. It's about $2,000 profit in that. But do I want to expose myself to spending from my savings, $12,730? And my answer is no. So I'm not looking at adding that to my watch list. Let's look at Love. Now, Love is also known, as we know, that Love is actually Delta. Now, if you're familiar with Delta Airlines, then you understand that their stock symbol is called Love. Now, let's look at Delta and let's see what we're looking at. It'll be 24 months from now. Should I add it to my overall watch list or should I just take it off? We're about to find out, because as I look through this right now, I'm going to have to adjust my numbers because I actually had it lower. Right now, it's trading at, I had it at 35.75 when I first started talking about it. It's trading right now 35.80, currently at 153. That's where it's at. But let's look at it. Where do I see this being and where's my entry on this here? I will tell you what my entry is as soon as I can get my computer to adjust with me. There we go. In the next 24 months, if I take that same position here, I see that Love, based on my discount rate here, Love should be trading $35 plus this $42. I see it getting to $42.50 when I add my high price. So if I enter right now at $35.75, I see that this will be trading at $42, as long as there's nothing else going on with the airlines. I do see it trading that amount. Now, the other thing is I also see a low in this. If airlines doesn't really pick up or they start doing these discount flights again, or they keep having any form of delays, because some of these airlines had a major situation during Christmas. And if they still have this issue with pilots, having a pilot be at the location and be there ready to get on the plane and ready to move, then I'm going to point out something here. So if I'm going to enter, though, it's currently trading at 35, but if I'm going to enter this, my entry price for Love has to be, in order for me to enter, I have to see where I can enter this stock at $35.75, put my discount in, because I need to make sure I don't make that boo-boo. And so that way you guys don't have to call me about it later. If I take the position and I go into this and I deduct this, I need $30.90 entry. So my entry has to be at $30.90 a share or less. Okay, so $30.90 a share for this to make work, because I'm using $3,575 in the first place out of my savings, because that's what you need. 100 shares, $3,575. So you're starting to hear how expensive it is for 100 shares at these prices. At the same time, I have it going to $42.50. Now you'll say, well, if you look at that price, I'm going to make over $1,000 on the trade. So if I'm using 35 and it's 1,000, then you start kind of understanding my overall philosophy. Because if I take 1,000 divided by 35, so I take $1,000, because that is the upswing I'm anticipating if I can buy it at $30.90 and it going to 42, and I divide that by 42.50, my exit, I'm looking at making, I don't know how that happened, but I should have wrote all this down, but I'm doing it in real time because people ask, could I do it? I'm literally looking at making $675 on that trade from 35, from doing it that way if I use the 35 number, but I'm making over 1,000. So if I take the 1,000 and I divide that by that 42.50, what I need to have, I'm going to make 23% return on one trade. So if I don't do anything else the rest of the year, I still made 23%. If the market doesn't do 23%, one trade using my savings, I beat the market for 2023. However, I like to really destroy the market. I just like to beat, I like to destroy. So if you like me, you do your due diligence, you do your discount rate, you look at the earnings, you look at the overall landscape of the airline industry, and you'll make the decision. Again, if you never like or subscribe to our channel, don't forget to hit the like button and the subscription button. Every Wednesday, we talk like this. We go over it. Next Wednesday, I'm going to already have this over. That way I can just tell you through and through. You don't have to sit here and watch me do it. But again, we know that when it comes to Love. Now, where do I see Love going if I'm wrong in 24 months and any other bad news come? I see this price going down. I mean, the low, just to be very clear, the low. And where I see the low at, just so you know, is around $27. Do I still think it's a good stock? Am I going to add this to my watch list? Will Love enter my watch list? No. It's not going to enter my watch list. Now, I understand somebody else may say, after the information you gave me, I'm buying it. That's your choice. But do your due diligence, though. Please let me just tell you, do your due diligence. We're going to see if I was right or not, because I'm going to always go back and look the following week to tell you what these stocks was. And at the end of the month, we're going to say, where was I at? What kind of money could I make? If I follow my own advice, if I'm going to take the time to go to the Securities and Exchange Commission, to look up the quarterly filings, to look up any entries from new insiders or any new mutual funds who adding this to their overall funds for leverage. If I'm going to do all that due diligence, if I'm going to go and look at the competition, if I'm going to call investor relations, that's right, guys, I do all of that stuff. If I'm going to do all of that stuff, talk to the competition, what does Love do great? What do they don't do great? And I don't take the move, everything I'm doing is spending a lot of time to do nothing. That's called aiming, and not pulling the trigger. And that we don't do. That's what we don't do. I don't like none of the Galicias. Aim and don't pull triggers. We got to aim and pull the trigger. Now, here's the last one. DraftKings. DraftKings, at the time when we first started, I had it at $17.69. At the other time, as we mentioned, and I want to take Vertical Connections, who actually, if you never went to their channel, make sure you check out their channel. You can actually see their channel. Congratulations. They just hit their mark, and they're now a YouTuber officially for pay. Congratulations to Vertical Connections. Had an opportunity to make sure I like to subscribe to their channel. They support me. We support them. And if you guys haven't clicked or even seen Vertical Connection, I definitely tell you to make sure you do that, because they support channels as much as you support us. So definitely want to give you that shout out, Vertical Connections. Now, with that being said, we're going to look at the good old fashioned DraftKings. You know, DraftKings has always been a very interesting company to me. Now, it is down 7 cents since actually 8 cents since we talked about it earlier. But let's look at where I have this going in the next 24 months. Do I add it to the watch list? And let me just tell you up front, I added DraftKings to my watch list. The NFL, see, again, I've never been a gambling person, so I'm not gambling here. I buy businesses with my savings account, but I don't gamble. See, because I'm going to make money. Whether you win on a bet or lose on a bet, I'm going to make money. But here we go with DraftKings. So let's look at DraftKings and what can we expect over the next 24 months? And what do I actually see? You know, because this is one of those things that I would actually say that in January of 2024, one of the things I would tell you is that if you have DraftKings right now and you think about it over the next 24 months, 12 months from now and here, one of the things that DraftKings has happened to them, and let me just check out something to make sure I say this so I know, it does not pay a dividend. Again, it's not like Love and Nike and Wells Fargo. It doesn't pay a dividend. So you got to keep that in mind. So entry is so important. Entry is very important on this. But this is what I would tell you. When it comes to DraftKings, and I'm looking at this over the next 24 to 48 months, and I take my position and I include my discounts, which is important. I have to include my discounts because entry is everything. And if I don't enter right, I pay the price. So underneath DraftKings, which is stock symbol DKNG, I did add it to my watch list for 2 reasons. That way you know. I looked at this, and if I can get the DraftKings where it's currently trading, and I had it originally at $17.69 when I started this, and it actually has went down 8 cents since then. If I can get this stock and enter it right around $12.39, it's a great stock for me to add to my overall watch list. But I need it because I'm only trying to spend. Now, you may say, how come I'm doing this? Because I'm discounting these stocks based on what I have available in my savings. That's important. If you don't have stocks in your savings and you can't buy 100 shares, then this is not the channel for you, because anything I do is based on a good old 100%, 100 shares. Let's call it the round lot if you're not familiar with that. So I need to get into DraftKings at an entry price of $12.39 a share. And I'm going to hold once I do that. Where do I see DraftKings going 24 months from now if I take that position? I see DraftKings going in the next 24 to 28 months to a price of $26. If everything remains the same, and gamble is gamble, I mean, this is bad, but I'm going to tell you, even on Animal Planet Puppy Bowl, there was somebody who made a lot of money in Vegas gambling on puppies playing football. Come on, guys. I would rather buy companies than gamble, just to be honest with you. But some people like to have a chance and don't own a company. But if you want to look at it, DraftKings is a place where gamblers can go and they be paying DraftKings a lot of money. And since I know that that is a human element where people don't have self-control, that's why I added it to my watch list. Because I would never go to the casinos and gamble, but I definitely will own a company that get to actually accept money from the other ones. And I'm looking at a $26 exit, entry at $12.39. But if I'm wrong, where do I see this stock going in the next 24 to 28 months? If DraftKings, which is DKNG, where do I see it going? Well, let's take the position here. Based on my discounting, I discounted this stock based on the earnings, based on some of the problems that DraftKings has had, down to this price here. And you guys may be upset with me, but I'm going to tell you, I know my entry is $12.39. That's why I want to get it at. But let me just tell you here, I have it at $12.10. So that's a little bit anything above. So my entry at 12.39 to 12.10, I'll do it just so you guys know. I would take the position. So I see the low of DraftKings being $12.10. So I can enter, be down 29 cents, not going to bother me as much, but I'm still telling you, these are my ones. So now my current watch list looks like this. I only added one. I didn't add Wells Fargo. I didn't add Nike. I didn't add Love, even though they're available there. I didn't do it. Again, Nike has a position where you can make two grand, but it's the cost of Nike is so expensive, $12,730. So I have a new one added to my watch list, and this is what my current watch list is as of February the 15th. I have Norwegian Cruise Line, which is stock symbol NGCL. I have Carnival Cruises, CCL. I have Capon, CPNG. I have what you call Bumble, which is BMBL. I have Roblox, RBLX, and DraftKings, DKNG, in my personal watch list. These are my personal watch lists. If you want to find out what I actually do hold in my portfolio, then you're going to have to hit the subscription button. That way you can find out from all the individuals who wanted to know a little bit more and how I come to discount these numbers, come to the evaluations. What are some of the techniques? So far, from what I've carried in my overall portfolio, I'll let you know if next week, if I remove anything and shrink my watch list down. And here's another thing. One of the things about my watch list is that I do not just continue to add. What I will do though, is when I start adding to my watch list that I didn't buy, I start increasing my savings. So I start looking at where can I cut back so that I can have my money go out and work for me. What is it that I need to take advantage of? How do I cut some spending down? If I pay something off, this is another way I pay off debt. Let me just tell you guys this. I use my savings as a mechanism to help pay off my debt. I don't use my savings deferment. I get it. People are looking for a rainy day. I'm looking for income. So when it rains, all I got is income. So if it snows and I can't go to work, I get income. If it rains, I get income. If I get a blizzard, I get income. That's the only thing I concern myself with. But if I'm saying if I can't go to work one day, I'm setting this money aside of my savings to pay that obligation, then that means your money never works for you. It works for your creditors. And that's where you get that statement come from me that equity always comes second to debt. See that come from? Debt, or another way I like to say it is debt takes priority over equity stake. And for me, debt doesn't. And I hope it is for you as well. Now, again, if you guys have any questions, you got something that you like me to add or look at, what I hold it in my watch list or I don't hold it in my watch list, tell me what the symbol is. And I'll tell you what I do if I have that money. Everything is based on what I have and what I don't. Don't forget to like, subscribe, and thank you for spending time with me for these 48 minutes we've been together. Thank you for going through the video with me. Thank you for giving me the opportunity to tell you, was I right or was I wrong, and allowing you to be the accountability to me. And my last disclaimer is, this is my personal watch list. This has no discretion against CFS Studios. CFS Studios has nothing to do with my personal watch list. They just gave me permission to do this Wednesday night show so that way I could be accountable and you could say, oh, he's a bad person when it comes to evaluating the stock, or this man knows what he's doing. But until next time, you guys have a wonderful, wonderful